Okay, we're going to get started. Good afternoon, everybody. Ben Swinburne from Morgan Stanley. Please note that important disclosures, including my personal holdings disclosures and Morgan Stanley disclosures, all appear as a handout available in the registration area and on the Morgan Stanley public website. Really excited to welcome back to the conference. To my left is Jorge Barrios, the co-president of WWE. He's held that role since 2008 when he joined the company. I think most of you are aware, but WWE is an integrated media organization and recognized leader in global entertainment. George, thanks for coming back.
Yeah, thanks for having us. This is a great conference. And that guy's potato chips saved me one because they look really good.
We can get you some food. There's cookies.
Awesome.
And
that's great.
donuts.
I'm starving. It's meeting after meeting. So.
All right, well, we'll go quickly. So you wrapped up last year with a fourth quarter earnings call a couple weeks ago. You guys had a really successful 2018, securing your U.S. TV rights. You did that long-term deal in the Middle East. What are you guys focused on for 2019? What are the priorities for the company this year?
Yeah, number one, as you know, Ben, we've got Raw and SmackDown, the distribution for that core content around the world. We need to lock that down. So some key markets for us: Middle East, China, UK, Latin America, India. So those are all ongoing. We've said we hope to get that locked down by the middle of the year, and those deals take effect, some throughout this year, and some will begin on January 1, 2020. So kind of locking those down, obviously important for us strategically because our distribution partners for that core content is a key part of the value creation for the business. Important for us financially. We'll have a lot of visibility over the next several years to a pretty significant portion of our revenue. So really important. So that's one. The second element, as we recently announced, we are moving our direct-to-consumer service to two new partners, Endeavor Streaming and Massive. So we've been hard at work over the last year or so re-architecting that experience. We're super excited about what that's going to mean for our fans. So we've been working on that for a year. Hope to launch in the second half of 2019. So a lot to be done there. And then the third element is continuing to deepen our presence in a lot of these local markets, and we're going to do that in a variety of ways. We're going to localize a lot more of our content, especially our digital and social content. We think there's an opportunity to localize the network in at least one additional language. So we're working through on the plans for that. We recently announced a UK performance center, so our academy, if you will. It's our first one that we've done outside the U.S. We have one in Orlando, Florida, which today is the hub of recruiting and training and developing the next generation of WWE talent. We think there's an opportunity to really deepen our presence in key markets through that. So we launched it earlier this year. We're going to learn a lot, and that'll be the blueprint for hopefully expanding that. So all those things will be a big focus in 2019.
Got it. So another busy year.
Yeah.
I want to touch on all those points, and maybe just before we do, investors often ask me, how do I sort of keep track or assess the level of popularity of the content? Is it growing? Is it shrinking? And I usually just say, well, Fox and NBC almost quadrupled what they're paying you, so that sort of speaks for itself. But you look at the ratings generally on TV, you guys have had some ratings pressure. You look at the attendance trends, which you spent some time on. The earnings call been a little soft. Consumer products. So there's certainly some questions in the marketplace about that data and sort of reconciling that with this incredible tailwind on the media side. How do you guys answer that question around measuring and assessing the core popularity and health of the IP?
Yeah, so what we try, I would say the most important metric for us is time spent. And in some cases, it's fairly easy for us to measure time spent. We have pretty good visibility, obviously, to our SVOD service. We have pretty good visibility to the digital platforms. On the traditional pay TV platforms, depending what country you're talking about, the measurement systems are better than others. But we aggregate all that, and that number is important to us, the scale of the number as well as the trajectory. So it was up in 2018, about 8%, 5.8 billion hours. So that was good. I always say, if you said to me 5 years from now, what's more important, that number grows or that your scale is big enough that it cuts through the clutter of this fragmenting ecosystem, I'd say I want both, but I'd probably take the latter. You know, I want it big enough that it cuts through, because in some ways it could be difficult for anyone to grow given the proliferation of ways to spend your time. I think what becomes important as that happens is that you want to be, you know, if there's a barbell effect where there's 10 million content creators from PewDiePie to the NFL generating half the, 10 million content creators generating half the economics, and over here, the other half are going to 20 or 30 passion brands like the NFL or the IPL and hopefully WWE. I want to be on that side of the barbell. So it's important for us to have enough scale to cut through the clutter. And certainly in the U.S. we think we do. But ultimately what we look at is time. Generally, you know, there's other metrics that it's hard for us to quantify time, like the attendance. So we just look at live event attendance. We'll look at what our sell-through is at retail. We'll look at our own direct-to-consumer commerce business. So we look at all of those. Generally, over a long arc of time, we feel good. I think the numbers speak for themselves of how we've done. And like you said, we had two pretty smart partners here in the U.S. Validate that with the economics. Having said that, and we think it's cyclical, Vince touched on it on the earnings call in terms of the injuries we had in 2018, that created a little bit of a speed bump for us. And we saw it in various places, which is why we think it is cyclical. So our hope is, you know, as talent recuperate and come back, that'll be in the rearview mirror. And people have asked similarly, well, how long does it, when that happens, how long does it usually take? So we really don't know. You know, it's not like it's happening continuously and you have some model around it. Last time I remember something similar was 2010. We had several top talent get injured or retire, and you kind of saw the same thing. So a little bit of softness, you know, 6-12 months later, you kind of saw it abate because you had new talent come on or people recuperate and come back to the main roster. So we'll see how that plays out. But generally, we tend to agree 2018 was a great year, and our hope, you know, it's 5 years of record revenue through 2018. We think this year we'll hit right around $1 billion, and our expectation is that, you know, for the ensuing several years we'll continue to build on that. Right.
So as you know, everyone's super focused on these rights renewals. You've got the U.S. one's done, which give you great visibility. The next question, of course, is what are you going to do with all that money? So you've got this guidance for 2019 of at least $200 million in adjusted EBITDA. Help us think about where you're investing incremental capital above and beyond sort of normal course operating expense growth in the business this year.
Yeah, well, first, kind of from a hierarchy of how we think about capital allocation, first and foremost is to have a balance sheet that can withstand tough times. I think it's pretty easy to architect a balance sheet on the premise that things will always be good. So we choose not to think that way. So we think about the balance sheet as being conservative and being able to withstand difficult times, not just good times. Second, we want enough liquidity to manage the business day to day. Third, we want to invest in the core business. The business has tremendous ROIC and ROE, and we want to invest enough to maintain that. Fourth is the organic opportunities that we have. Fifth is evaluating inorganic opportunities, and then the final use of capital will be return. We've got the dividend, which is 48 cents a share payout, and then the board recently authorized a $500 million share buyback program that we'll execute. You know, as we said, when we believe the intrinsic value isn't properly reflected in the market price, with some margin of safety built into that.
And you had mentioned to us that on the earnings call, which was helpful, sort of an underlying kind of 3% growth rate in your OpEx base, and then there's spending above and beyond that in 19. You have this sort of revenue step up in fourth quarter, but help us understand where that money is going to. What are the areas you're investing in this year?
Yeah, there's three kind of big conceptual areas. Some of the initiative cuts across multiple or two or three of these. So it's either content, global markets, or digitization. So on the content side, it could be one initiative that hits content and global markets would be localizing more of our digital content, right? So we create 600 hours of digital short-form content a year, and 99% of that is in English. it should be in more languages. So Raw and SmackDown, for example, our core content's available in almost 30 languages around the world, and that should be in more languages. In India, it's only available in Hindi. We should have Raw and SmackDown in 4 or 5 different languages. But when we look at social and digital, we should be doing it in more languages. So that's one example. On the digitization side, we're going to relaunch the network I mentioned, so better digital products, more robust data stack, which we think over time really strengthens our ability to put smiles on our fans' faces, because we understand what we're doing does that better. So that's really important to us. And then just having more of a local presence. One of the challenges we have as a small company that's popular all around the world is, in India, I've got 7 or 8 people. It's a big country.
I hear that.
Yeah. In China, we've got 10, right? So I always joke, we have one person for every 150 million people in China. So it's an efficient model, and that is a great thing. And if Vince were here, he'd remind everyone of that. We built this big global business really, really efficiently. So now the question for us, though, is do you kind of bend the growth curve by investing more people on the ground? But it's those 3 areas, and hopefully that gives you a little bit of a flavor of specifically some of the things we'll do. And
when I don't know if you're prepared to talk about this, George, but when you exit this year, sort of where in the project phase, if you look across sort of the larger initiatives, are you? You think you'll be largely done, so these expenses, we sort of reset the base and we grow off that, or is this something that continues to be incrementally?
Yeah, we've got a long list of what we believe are ROI positive projects in the pipeline. So the real question for us is pacing. We're going to reset 2020 to some level. We've got our eye on our core content becoming available again in the marketplace in 2025, and so we want to make sure we're investing to maximize that opportunity, similar to how we did the last 5 years. And then in the interim period, we want to grow revenues and grow profits as well, right? So that's from a time frame perspective. And when I say that we have a long list of ROI positive projects, the ROI is either direct, first order, or second order. So, for example, if I localize digital content, there's first order monetization around better sell-through rates, higher CPMs. So we have a model around that. We can test and see if we're right about our model, and that's first order monetization. The second order monetization of that investment comes when that Raw and SmackDown are back available in that market, right? Because if I strengthen the brand and make it as valuable as possible, I have, it's not unfortunately, because it actually is a big engine for our growth, but I can't get the monetization for that investment until I have another opportunity in the marketplace. So, but to your question, it's not that we've run out of ideas or of opportunities to grow the top line and the bottom line. It's just around pacing it, because in the short term, that second order monetization, we have to wait a few years. So we want to just balance and make sure we're still growing the bottom line while we wait for that. So it's less a matter of, do we have things to invest in? It's more around the pacing of those.
Yeah, that makes sense. I think I've asked you this question probably every time we've sat down over the last year plus, but
it doesn't make you any different than anyone else.
Thank you. Thank you. But could you update us on, in particular, the UK and India? Just how do we think about those markets relative to what you've done so far in other markets?
Yeah, look, obviously we're right in the middle of those, and you had asked me the same question about the U.S. deal when we were right in the middle of that, and I didn't.
Look how well that turned.
Yeah, I know, right? And I didn't answer that question, and so I really can't answer it. I will tell you the way I think about it is we've got kind of these basket of renewals. We said in 2020, if the deals remained flat, there would just be over about $100 million in revenue. Obviously, the AAV on those deals is less, because that would be taking their last year of the deal. And so once we get all the basket of deals done, we'll update what that number is. Mm-hmm. And so we won't give people, because obviously we have confidentiality provisions in all our agreements, so we won't give economics of any one deal, but we'll give people visibility onto the basket so they can see, okay, now I see what the visibility is on the revenue stream for WWE. So, and our hope is, sometime mid-year or so that we'll be able to do that.
Okay. And should we expect you then to sort of think about, or the way you communicate to the market is all of these international markets you laid out get thrown in the basket, and that help us think about where that goes from here?
Yeah, well, probably as deals get done. I mean, we've announced deals over the last several months in different markets. So as deals get done, we tend to announce that, hey, we've signed a new distribution partner. But as far as the financials around them, we'll wait till we have enough of them that we can bring them together so that we're not, violating the confidentiality agreements that we have for one specific partner.
And imagine that relative to the UK and India markets like China, Latin America, and the Middle East are smaller today. These are earlier gestation markets for you guys, I'd assume.
Yeah, I think we've been public before that our largest markets in terms of total monetization were the U.S., UK, and India. Middle East is now number 2 in 2018 after the U.S. And then specifically on the rights deals, we've said there was the U.S. and then the UK and India were number 2 and 3. So that's all we've been public with. Okay.
And just one more on the UK and India. Can you just help us remind us today how you're distributed in those 2 markets?
Yeah.
Because obviously where you start is important for where you're going to go.
Sure. So today in India, our partner is Sony, and the in-ring content sits on their sports channels, which is part of the broad bundle. So it's not a tier. So it's part of the core bundle on the 10 Sports branded channels. So that's where you'd see Raw and SmackDown. We actually, and it was the first market we did this with, and it was incredibly successful. And it's a model we want to replicate in different ways. But the core concept, we created a highlights show. Some people call it magazine show, clip show, highlight show. Every region has its own term of art. But it's a 2-hour show that covers the happenings of WWE. It's hosted by local celebrities, so not local wrestling talent, local celebrities, and it's on Sony's GEC channel, so General Entertainment Channel, which is their biggest channel.
Broadcast or on pay?
It's on the broadly distributed pay platform. So it has almost 80% television household penetration in India. That piece of content does incredibly well, and then it exposes WWE to a broader audience than just a sports audience. So it's a model that's worked great for Sony. They're big supporters of it, and it's worked great for us, and it's something that we want to do in as many markets as possible. And obviously, to be able to do that, there's a scope of rights discussion that you have to have with your partners to be able to do things like that. In the UK, we are, and have been for a long time, on Sky, and we sit on the Sky Sports tier, so it's fairly tiered up. We don't have something that's broadly distributed like I just described. So that's the model in the UK is a little bit different than it is in India.
Yeah. So this idea of a highlights show broadly distributed and then a sort of core product on the pay side has worked well for you in India. I think it was New Zealand, and there were some other markets recently where that model looks like you're...
We've done something similar. We haven't gotten as broad a distribution as I think is optimal in the Middle East with a show called WWE Waluha. And we've done something similar with Fox in Latin America called WWE Saturday Night. But the core element of it is you're telling the story across both brands, Raw and SmackDown, in some cases NXT as well. Yeah. So in essence, it's the WWE world. And also, we believe a critical element is the integration of local celebrities as the face of the shows, right? Because it then gives it a much more local flavor. Because we've done highlight-type shows before that we've produced, and so you have WWE talent, if you will, as the face of the show, which are great. But we really do think this kind of local flavor has been a kind of key ingredient. So it's something, that element we want to take to as many markets as possible.
And maybe just to wrap up on this, on the rights front, once we get all these deals done, revenue will step up nicely in 20 and in the fourth quarter of this year. These projects that you've got going on are stuff that you guys are making determinations that they're worth spending money on. That's right. A lot of the conversations at the conference have been on sports rights with leagues and unions where there's rev shares and things like that. From a WWE perspective, my understanding is you don't really have direct relationships between the revenue step-ups and kind of content costs on the talent side. Is that the right way to think about it? Or how should we think about talent cost pressure, if there is any, as your revenues step up?
Yeah, obviously it's different than the leagues. I would say that the model, the model Vince built 35 years ago is one where when the company does well, everyone does well. So talent inside the company, the corporate talent, and the talent in the ring. And so that model's worked well. We'll continue to do that. So I think it's fair to say that as WWE does better in fourth quarter 19 and into 2020, that the talent will as well. So that's always the plan. As you mentioned, our model on how that gets kind of apportioned is a little bit different than the league.
Yeah, got it. Okay. Let's shift over to the network. You mentioned that you're moving to 2 new platforms later this year. I don't know what you can tell us, but what will the consumer see differently, at least at a high level, as you guys migrate over to a new platform?
Yeah, so we're going to save the big reveal for a different audience, and I hope that nobody take it personally.
Give them the potato chips.
I'll trade that for 3 chips. But look, I think there will be a few things. Number one, you'll see an improved core product. Obviously, we've invested a lot of time and energy, so we're excited about that. You'll see, today WWE has a lot of free content available digitally. You can see it on our own and operated. You see it on YouTube and Facebook. But on our own and operated, it's kind of a bifurcated experience. I think you'll see that more richly integrated. So it's one experience for subscribers and non-subscribers. We think there's an opportunity on creating a premium tier as well. And then eventually, up to date, we've only available in English in terms of both the content, the UX, the commerce flow. So we think there's an opportunity to actually localize that. So that's where we've been hard at work. Our hope is towards the back half of the year, we launch. Obviously, everything that I just talked about doesn't happen day one. It kind of happens over several months. But we're excited about it. It's been and it's a labor of love for the people at WWE, because this product is for our biggest fans.
Right.
And if you go on Reddit or Twitter or Facebook, there's a lot of kind of passionate engagement about WWE Network, and so we've taken a lot of that feedback, and hopefully our fans will see that we've listened to them.
Does this change at all either your expectation of a 3 to 4 million subscriber opportunity for the network, or how quickly you might get there?
Yeah, look, over the long arc of time, we still think we have a big enough fan base that portion, which relatively speaking would be a fairly small percentage of if you looked at everybody who watches some amount of WWE content somewhere in the world. So we think that's still a reasonable target for us to shoot at over time. The whole timing, that's a little bit more difficult for us to kind of wrap our arms around. Yeah,
makes sense. You spoke before, Jorge, about localizing content more. Maybe talk about some of the investments you're making this year internationally and what kind of returns you expect to get.
Yeah, and first order returns would be us putting people in market, either social, digital producers, editors, to take the content we create digitally today and localize it in some way. It might be a voiceover with a local talent from that region. It might be some sort of subtitling. It might be a slightly different format, where we actually use local talent to narrate some of the content. So, they'll differ region by region, but the ROI there, hopefully the direct ROI will be better advertising dollars. The indirect ROI, like I mentioned before, is that over time strengthens the brand. And, whenever in that region, Raw and SmackDown, again, the core value drivers of WWE are available, whether it's us monetizing Raw and SmackDown or through a partner or however it's done, that the opportunity to monetize has grown because we've deepened the brand. So it's this, and the first order monetization, easy. People like that. Obviously, you see it right away. That second order, I get it. There's a time element to that. But ultimately, that's the big value engine for WWE, and we think it makes all sense in the world to invest into that.
Let me ask you about the Nxt UK Initiative, and just generally when you're putting academies in place around the world, give us a sense for how much that kind of thing costs. And on the UK, the Nxt UK in particular, how has that content resonated so far?
Yeah, so for people who don't know, today we have an academy. We call it the WWE Performance Center in Orlando, Florida. And we'll have anywhere between 60 and 100 talent that we recruited from around the world training to be the next generation of WWE superstars. So last year we had recruiting events in Saudi Arabia, in Chile, in Germany. We're having one in Mumbai in a couple of weeks, actually in a week. And we scour the country, the region, before we have the event, invite 20 to 40 of what we think are the most promising talent. We have a structured program to evaluate the talent, and we'll take, let's say, 10 to 20% usually out of that event comes to Orlando and gets trained. That talent that's in Orlando, we're actually creating content from, right? WWE NXT, if you use the sports analogy, it's our minor league, our development league. That's available on WWE Network in the United States. In different markets outside the U.S., it might be on pay TV or it's still on the network. And it's developed its own following, right? There's a pretty passionate fan base. I've got a friend of mine who loves, not a big NBA, well, he likes the NBA, but loves the G League. Like, that's what, he loves it. He says it's pure basketball, it's love of the game, whatever, loves it. So I'm not saying it's the same analogy, but there are fans of NXT. They're just fans of NXT, right? It has its own passionate fan base. We've said internally and done a lot of math around what would an academy in a region look like, right? So imagine one in India or China or Latin America. And we think that there's an opportunity to broaden the pipeline of talent, create more monetization opportunities in the market, tour, merchandise, potentially media. Number 3, deepen the brand, again, so when Raw and SmackDown's available, you've now got a presence in that market 365 days a year as opposed to coming in and out. And then over the long term, this is 10 years or out, boy, if live content becomes as critical outside the U.S. as it's become in the U.S., well, now this is giving you a bridge or a path to having live content in those markets, right, because of the time difference. Right? So it's got multiple ways that it could benefit. Our first foray is in the UK. Now, it's what I'd call a beta version at this point, right? We're dipping our toe. We don't have a 365-day-a-year presence. It'll be several days a month. We'll bring in talent, train them, create media, do events, and that's our way of learning, right? We're going to now learn how to operate the model, see what the benefit is. If our general thesis is correct, the one that I laid out, you'll start seeing us kind of evolve that to full-year presence in certain markets. On the is it working? I'd say it's still early days, but one of the things that really did surprise us in the UK when we did the UK Championship, which was the media we created from this development talent in the UK, it was hard to have a benchmark. We'd never done it before. We put it on WWE Network. I would say that I had my own mental model of how it would do. It did better. And what also surprised me is how much viewership we got outside the outside the UK viewing it. So again, if you're a passionate wrestling fan, guess what? You were interested about this. So yeah, it's really interesting, early days, but it's our first test, if you will, and my hope is that, what I described, kind of we start seeing that playing out and we'll take it and kind of build it out. In terms of the cost, look, if you went to Orlando, you'd say, oh, this looks like about 20,000 square feet, so multiply that by whatever the going rate is in a market. We've got about 10 full-time staff, and then depending on the talent, you compensate them according to local, wage norms. I would say OPEX, you're probably looking $4 to $8 million a year, roughly, depending on the market.
Got it. Makes sense. Let me ask you one more, then we'll open it up to the audience, see if they have any questions. There's some discussion was on the call, and I think in the marketplace, about adding an additional hour on Friday nights on your Fox deal when it kicks in later this year. Talk about sort of the cost-benefit analysis of why that may or may not make sense for you and your partner.
Yeah, so the first thing I'd tell everyone is, for a long time, we've created 6 hours of live in-ring content. It wasn't always broadcast live, but it was being created live. So on Monday nights and on Tuesday nights, 3 hours each night. If you went back 10 years ago, 2 hours was Monday Night Raw, 2 hours was SmackDown, and then the other 2 hours were ECW, WWE Superstars, WWE Main Event. So we've done this for a long time. It's not new. In 2018, we have 3 hours of Raw, 2 hours of SmackDown, and that 6th hour, the way you referenced it, was 205 Live, which sits in our bundle, WWE Network. And for 26 weeks or so, we did Mix Match Challenge, which was a show we did with Facebook for their newly launched Watch tab. So the question for us moving forward in 2019 and beyond is, what's the best use of that hour? Is it best used as traditional pay TV partner, if there's interest there, right, because there has to be interest. Is it best on our WWE network to drive engagement, which hopefully then drives retention? Should it be on one of the AVOD platforms? So, and the analysis, if you will, around all that is the same analysis we do for all our content on where it should belong. Is what's the reach, what's the engagement, and then what's the monetization. And the reach has several layers beneath that, which is who are you trying to reach? Is it for a core fan? Is it for a new fan? Is it for the next generation of fan? Is it for your female fans? For example, Total Divas being on E, right? So when we thought about that, we have the same discussion. Should that be on WWE Network? Should we put that on YouTube? Hey, should we do that on Facebook? Or is it best served on paid TV? The 6 hours is fundamentally a different discussion. It's just the only difference is elevated because live in ring has more value, we believe. So that's the thinking we're going through now.
Gotcha. Okay, I can keep going, but let me see if the audience has any questions for you, George. Just please raise your hand so the webcast can pick it up.
It's a shy group.
It is. You can pass around more potato chips.
Poor guy's never been in a bag of potato chips.
Right, exactly.
A much bigger question further back. How far away are we from a sport eventually being pure direct-to-consumer and beyond the cable networks? Because as the cable networks, in theory, slowly lose viewership, the margin uplift, as you guys have proved, is there. But it's obviously a long way away because the consumer needs to evolve. And so how long do you ever see it happening in the future? And if it did, how far would it be?
Yeah, I know that there's the grand thesis of pay TV, cable declining, and so on. And obviously, we're seeing the numbers. I will tell you, I think there was going to be a content bundle in the future. I don't think that's going away. Now, who bundles it and what the architecture of the bundle is, how much is in it, what it costs, that may change fairly dramatically. But we're certainly not ones that say, oh, the entire bundle is disappearing and everything is going to be a la carte, direct-to-consumer. I don't think the world's going to work like that. So I think the decision for us, and it's one of the reasons we focused for 10 years on building out the social and digital platform and why we're the #1 sports network on YouTube, and that we started working on the direct-to-consumer 7 years ago, and we're now the #2 sports SVOD service in the world, direct-to-consumer. The reason we did that is to give us optionality, so as the world changes, we can have choices, right? We built up the capabilities, the fan base, the engagement levels, and as the world changes, we can move it. But I will tell you personally, I'm not one that subscribes that the bundle is going away. I think bundles work for the bundler, and it works for the provider into the bundle. Now, over time, again, who gets what, how the economics get shared, who's doing what, I agree with that. That probably will be very different. So that's how we think about it. It's less around trying to guess how does all this shake out. It's more around making sure we have optionality and capabilities to succeed in however it does.
Hi. How should we be thinking about some of the digital players being involved in some of these international negotiations? You mentioned the success with Facebook's Watch tab. Should we expect some of these big tech giants to be looking at some of the international rights? And then are you open to splitting up Raw and SmackDown in these international markets in the same way you did in the U.S.?
Yeah, on the first one, when you're talking about the digital players, there are things that are unilaterally controlled. So if we decide we just want to do a rev share with any of these digital players, we can decide to do that ourselves and go on the platform. I think that your question is more, no, I mean really more them licensing your content, like Mixed Match Challenge, in more of a traditional manner. I wouldn't speak for them as whether they would be interested in WWE or not. You have to ask them that. The way we would evaluate it, it's what I said to Ben, is we're going to look at reach. Now, in this case, you're talking about internet players, the reaches, the entire broadband universe. Engagement, and that differs, right? Engagement being how much time are people spending watching videos on these platforms, long-form videos especially. So we'll have to evaluate that, and then the economics. So that's the way we would think about it. We do our math. The economics are easy. The other one's a little bit harder because you're trying to, impute first and second order impacts of the loss of reach, or how long until the reach and engagement reaches more traditional TV viewing. So obviously there's angels on a pinhead there, but that's the math we do to evaluate it. So that's how we think about those players. And again, you'd ask them if they would be interested in WWE. On the splitting, yeah, that is our going in preferred model. we can't always accomplish that because the market may not allow you to. In some markets, for some providers, rights holders, the exclusivity premium just may be too much, where you say, you know what, I'll give up my preferred model of splitting the rights, and I'll go with one partner because the exclusivity premium is too much for me to kind of leave on the table. But we actually think it's better for everyone. The buyer may not agree. We actually think it's actually beneficial when there are multiple parties involved. There's this kind of peer pressure, competitive dynamic that occurs, and we think that's a tide that raises all boats. But again, the buyer may not agree. So we go into each market thinking that would be a great model. Sometimes it's just not the best answer given the market dynamics. In the U.S. this time around, obviously it was.
Okay, we're all out of time. George, good luck with all the international renewals. I'm sure you'll be busy.
Great, cool. Thank you.
Coming.
Appreciate it.
Thank you, everybody.
Everybody.